Hello traders, Gary Wagner here. It is 10:30 in Honolulu, 4:30 in New York on Thursday, 18th day of September 2025, and this is the evening report for gold and silver. It seems as though some traders did not like the Fed's decision to cut rates by 25 basis points rather than 50, and many analysts are citing that as the rationalization that gold continues to drop today. Additionally, the Federal Reserve did mention that they plan on implementing two more interest rate cuts of 25 basis points each at the remaining two FOMC meetings this year, which should provide bullish undertones for gold. After dropping roughly $32 yesterday, gold continued to decline with a drawdown today of $16.60 or 0.45%, taking the most active December contract to $3,677.90. On closer inspection, it was dollar strength today that provided most of the selling pressure for gold, with a minimal amount of market participants actively selling gold contracts. On yesterday's show, I talked about the fact that I felt that gold would probably enter some sort of correction. However, that correction would be a shallow one of either 23.6%, taking gold to $36.52, or $3,594, which would be a 38% correction. I believe that that will be the outcome on this current correction. To put this current rally into perspective of the big picture, I draw your attention to the daily chart on the screen, in which we have completed a full motive phase beginning in November of 2022, with wave one concluding in April of 23, with gold at $2,400, a corrective wave two that took gold back down to $2,100, and the long third wave that concluded at the end of October 2024, taking gold to $2,950, a shallow correction, and then a final fifth wave. From there, we had a correction that unfolded as a compression triangle that concluded on our thrust line, this current rally here, that began roughly on August the 20th, and now I believe there's a high probability that this wave one has completed, which means, and this is not to scale or price, but for illustration purposes only, that we will get a 2, 3, 4, and 5. These later waves not occurring till the middle of next year. Most importantly, this current impulse motive phase that we have just entered will take us through the end of this year into the middle of next year, and for my updated target for the middle to third quarter of next year, taking gold to $4,000 per ounce, with the possibility of gold trading as high as just above $3,800 as we go into the end of this year, December and January of next. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.